Good morning. Welcome to the XM.com weekly market update. And with me again is Peter McGuire, the CEO of XM. Good morning, Pete.
And good morning, Andrew.
Okay, the Aussie dollar has recovered slightly.
Yes.
Most of last week it was sub 64. So as we can see, it's around that 64.30 mark.
Yeah.
Recovered a little bit. Some numbers out of China showing some signs of recovery, albeit very small.
Dim.
But it's helped boost the Aussie dollar slightly.
Yeah, well, the peso was hit down hard at about 63.460, I think, and then it's bounced, as you've said. And, if it gets out of that channel of that, 63.60 to 64.60, then we'll see some green shoots either way. But it seems to be very much range bound, and as that chart is demonstrating, it's gone back now for a best part of probably 4 to 6 weeks. So, we've just got to wait and see what happens with the US dollar.
Yeah,
and as you said about the China situation and what happens here with unemployment, and we've got some big data points coming out.
Yeah, for sure. And with the RBA, there's a lot of talk now that pretty much all the consumers are hurting.
Are they? What?
Seriously. So you would sort of think that will flow through to those inflation numbers over the coming months. And is the question, is the RBA done with the rate hikes?
Well, they're saying it's a 35% probability out to February next year that you'll see 25 basis points. But we've got to be mindful of two things. First off, energy prices, and they're back at $90 a barrel. And everyone that I'm talking to, as far as the hedge funds, and I'll be in the Middle East in the next couple of weeks, everyone's saying it's $100 in September. We know what happened as far as Russia and Saudi, as far as pushing those cuts back to December. You know as well as I do, you've been around long enough, you limit supply, then that's only going to drive one thing, and that's price. And if we get prices back up to 95 or 100, then inflation's going to kick off again, and that'll be the change as far as central bank's policy.
Yeah, so we'll see where that lands. Speaking of China, the CPI numbers came out a few days ago. Now, not deflation this time, but it's only 0.1. So I guess they would take that at the moment.
Yeah, they'll take it, and it's probably a lot better than where it was. If it, have a look at there at going back to the 2000 or 2010. But yeah,
it's a big change, isn't it? That's a 2-year chart, and I know sort of coming off the back of COVID and whatnot, but still, if you look at over the last sort of 6 months, from a China perspective, they're pretty nasty numbers.
Very much so. Yeah.
Eurozone GDP is creeping down.
Yep.
So you would sort of think we'll see on the next chart as well, but are they heading for a recession? Most likely. Not there yet, but...
No, we've got a couple of things happening in the Eurozone. First off, you've got borrowing costs at the highest ever since inception of the Euro. Secondly, we've got that manufacturing report coming out this week. I think that's industrial production out of Germany. Thirdly, you've revised GDP down from 0.3 to 0.1. So it's getting very close to that zero, or, what happens moving forward. And you're probably right, recessionary fears. Eurozone seems to be taking a big hit at the moment. They've swelled on the summer dollars as far as tourism, but it's going to be interesting how what happens as far as gas, winter, and demand, because it's a weakening appetite globally for those finished products coming out of the engine of Germany.
That's right, and as you say, the summer recently in Europe was a very good summer from a tourism perspective.
Oh,
so
every man and his dog was there.
Yeah, it sounded like it. So, and if we look at the euro, sort of around that 107.5 mark roughly, so under a bit of pressure there as well.
Yeah, euro, I wouldn't be surprised, maybe a little bit softer. There's a chance you're going to see about a 35% probability of a rate increase, 25 basis points for Eurozone. And the other thing is that US dollar index now at about 104.60, was up through 105. So we've just got to see where that US dollar trends. And you've got some data coming out of the States this week. And we didn't get any traction really. It's been 2 months, because last month, of course, you had Jackson Hole.
That's right, yeah. So we've got that, the CPI numbers coming out.
Yep.
Later this week. We had the non-farm payrolls a bit over a week ago now. A little bit stronger than expected, but as we've said quite a bit, the labour market there has sort of held up very well.
Well, it has. I wonder how many of those people, and I'm not throwing a wet blanket over it, how many of those people actually had to take a second or a third job to match the inflation costs?
Well, that could be the case. It's amazing how what people do to get by.
Well, this is interesting, from absolutely, you know as well as I do, Maslow's theory, and the last thing to sell is traditionally your asset, which is your home. You'll cut back on the food, all the expenses to get shelter, and with inflation and, of course, with borrowing costs going up, then that's really impacting the I suppose the size of the wallet, how much is left at the end of the week.
Yeah, but you're right. Everyone will do everything they can to hang on to their house. So.
Yep. Or shelter.
Yeah, there, of course, yeah. The CPI, the inflation numbers, come out later this week, so they're expected to be around about the same mark as last month anyway.
Yeah.
So they're not expecting anything too drastic there. Retail sales is coming off a bit as well, so which is not unexpected.
No, I would have thought possibly with retail sales over that summer period, it'd be interesting to see if they bounce to the upside, because a lot more spending, and traditionally people are out and they're just doing stuff. Yep. But we're just waiting for those numbers to drop and what impact that has to certainly Fed policy and GDP and just market sentiment.
That's right. Finally, we'll have another look at the oil price, which we've been tracking over the last few weeks. So it's hanging in there. So it's been a decent rise since, what's that, May, June sort of thing.
It's about an 8-week rally to the upside, 9 week.
It's solid, and as you mentioned, with the cuts the Saudis and the Russians have put in place, which has been extended to December. As you mentioned. You would sort of think the oil price could climb a bit higher.
Yeah, the hedge fund guys and all the big traders that I talk to on some of those Gulf Intelligence and the big chat rooms and discussion conferences we do most weeks, they're all saying it's $100 this month. So I'm just sitting here waiting for it to happen. If it does, the two things that could really spike it quickly are hurricanes, because you're right in the middle of that season now for the US, which could impact production. And the second one, of course, is geopolitical. And it seems to be, everything I hear, it's the Taiwan/China situation, what's happening with North Korea, how's Ukraine and Russia. There seems to be a lot of bubbling under the surfaces. Iran, you've got the BRICS. And Biden, is he dead man walking? Are we going to see a change of batter and he go and Kamala Harris step in?
Yeah, maybe. And also just like weather events, like you look at the news every day now, and it's either fires or floods or hurricanes earthquakes somewhere in the world, and it just seems relentless at the moment. So,
it does,
and obviously, if that affects those oil-producing countries,
and the production of those rigs, certainly in the Gulf of Mexico. So if you impact, see that the states have run their strategic petroleum reserves right down under Biden. So if you have any geopolitical and you've got to top them up, then they're going to top up 600 million barrels, and it's going to be a monstrous amount of oil to cover.
Yeah, oil could be a good trade.
I think it will be. It's been a great trade if you're looking at that. We've discussed that for many years together. It's been great for the last 8 weeks. Our traders are all over it, and I'm not putting a call out there saying go and buy oil. All I'm saying is have a look at the charts because it's been dynamic, and many are saying it's trending higher.
Yeah, and that's sort of you're seeing that particularly in the US. Some of the big oil companies as well. Their stock price has gone up. Where for quite a while that was one of the laggards.
Absolutely.
Sort of earlier in the year where tech was going
mayhem.
Where now is it the turn of the oil companies to shine?
Yeah, well, as you know, I mean, you pull it out for $70 and you charge 90. There's a fairly good premium, and that's what Saudis are after as well. I mean, all these big countries, it's great for their bottom line.
That's right.
Mohammed bin Salman, just on that, I'll be in the UAE, and I hope to cross to you live from there. But they're spending $500 billion on a new city, or it's a culmination of cities across the footprint of Saudi. So they need money.
Yeah, for sure. And they know where to get it.
Well, yeah, they're not getting out of chicken sandwiches, they're getting out of oil.
It's coming out of the ground, yep, for sure. All right, we'll keep an eye on that over the next few weeks, and in particular the US inflation number this week.
Yeah, going to be a good week.
Yep, certainly will. All right, Pete, thanks again.
Look forward to seeing you next week.
Excellent. And that's the XM.com weekly market update.